What crypto regulations exist for DeFi exchanges in 2023? In the fast-paced world of cryptocurrency, the question on many people's minds is what regulations are currently shaping decentralized finance exchanges in 2023. With the rise of decentralized finance, or DeFi, exchanges, understanding the regulatory landscape is more important than ever. Just yesterday, new developments emerged that could impact how these exchanges operate. As more individuals seek information about DeFi, it is essential to break down the current regulatory environment. In 2023, DeFi exchanges operate in a regulatory climate that is continuously changing and varies greatly by region. Unlike centralized exchanges, which are generally governed by established regulations, DeFi exchanges face unique challenges. The decentralized nature of DeFi means there is no central authority to enforce compliance, making it difficult for regulators to apply traditional rules. One significant area of focus is stablecoins. In the European Union, the markets in crypto assets regulation is making waves. This regulation provides legal recognition and compliance requirements for stablecoins like United States dollar coin. The use of compliant stablecoins in DeFi is becoming increasingly important as these digital assets bridge the gap between traditional finance and DeFi. Anti-money laundering and combating the financing of terrorism regulations are also gaining traction. Countries like New Zealand are tightening controls on cryptocurrency infrastructure. By banning cryptocurrency automated teller machines, they aim to prevent illicit cash-to-crypto conversions. This impacts DeFi by restricting access to fiat currency, which is often necessary for participation in these exchanges. National regulatory approaches are also noteworthy. For instance, Nigeria has recently lifted a ban on cryptocurrency transactions. Nigerian regulators are now open to allowing stablecoin operations under certain conditions. This indicates a willingness to balance innovation with regulation, which could pave the way for DeFi projects in emerging markets. However, DeFi exchanges face specific regulatory challenges. The absence of a central authority complicates the enforcement of traditional regulations. For example, DeFi protocols typically relying on smart contracts and automated market makers instead of order books. This differs from centralized exchanges, which offer various order types and fee structures. Fees on DeFi exchanges are generally transaction-based and paid in cryptocurrency. In contrast, centralized exchanges often charge trading fees and withdrawal fees in both fiat and cryptocurrency. The global accessibility of DeFi protocols adds another layer of complexity, as determining the applicable jurisdiction for regulation can be challenging. As we move further into 2023, the regulatory scrutiny on DeFi exchanges is likely to increase. With a focus on stable coins, anti-money laundering compliance, and consumer protection, the regulatory environment is evolving. Centralized exchanges are facing direct licensing requirements, while DeFi protocols remains in a gray area. The role of compliant stablecoins, such as United States dollar coin under the markets in crypto assets regulation, is becoming central to the integration of DeFi with regulated financial systems. Overall, the future of DeFi exchanges will be shaped by how regulators respond to these challenges and opportunities. As the landscape continues to change, staying informed will be key for anyone interested in participating in decentralized finance.